Welcome to the Data Scientist Podcast with Dr. Stylianos Kampakis. Dr. Kampakis is a data scientist, statistician, and blockchain expert with a mission to educate the public about the wonderful capabilities of technologies like AI, data science, and DLTs. These technologies have the potential to transform the world, the economy, and our lives. However, there is too much misinformation around tech, and so most people are just confused about what is true and what is not. Whether you are a CEO, an entrepreneur, or just an enthusiast, the Data Scientist Podcast helps you separate reality from hype.
Hi everyone, this is Stelios, and in today's podcast we're going to discuss a report produced by the Bank of England and released in October 2019 that is talking about machine learning in UK financial services. So this report was based on UK financial institutions. The questionnaire was sent out to nearly 300 institutions, but around 100 firms came back. And the findings are very interesting. So the finding which is most interesting for me is that the financial firms in the UK at least, they seem to be adopting machine learning on a faster and faster pace. So let's talk a bit more about the results. So 2/3 of those surveyed, they said that they're actively using machine learning. So 2/3 is obviously not everyone, but it still shows a huge amount of progress that has been achieved over the last few years. Keep in mind that finance produces tons of data and it's one of the wealthiest industries. So it's one of the best industries to apply machine learning for this reason. However, there are some barriers to applying machine learning, and the report discusses about this. We'll talk about this in a while. So 2/3 of those surveyed, they're using machine learning applications, and the two most popular applications seem to be fraud detection and anti-money laundering. No wonder fraud and laundering, they're huge issues. They cost financial institutions huge amounts of money. There's also a very big social impact from both of those problems. And it makes perfect sense to use machine learning to try and fight those issues. Also, machine learning is used in some other applications like customer service, using chatbots, or in marketing tasks like recommending loans, for example, or account types. I believe that personalization is going to play a larger role in the market. And what this report is talking about loan recommendation or account types, we're going to see more and more of this coming, not only in the finance industry, but also in other industries. So I think it's very likely we're going to see in the near future more customized financial products which are suited to the individuals. And these products will be created in an automated fashion. So I think we're eventually getting there. Also, some other applications are in insurance, in underwriting, in credit lending, in trade pricing. So it looks like there are quite a few different applications in financial institutions. However, the question is, if there are so many applications and if the firms that are using machine learning are so happy with it, why not every bank is adopting it? Yeah. So obviously, there are some barriers to adopting machine learning. And what this report says is that by far the most important barrier to adopting machine learning is legacy systems. Yeah, it's legacy systems. And that's very interesting because banks are, for those of us who work in technology, we know that bank is the archetypal example of an organization that suffers from legacy problems. And it's really problematic to see that no one has come up with a good solution for this. So basically, for those of you who are not in tech, legacy system refers to systems which are quite old, and a bank has to go with them solely because the cost of changing the system is so large that they just can't afford it. And quite often, this is accompanied by a risk in changing the system. Maybe changing the system is going to bring everything down. So they just have to go on and on and on. So that's an issue. Some financial institutions also said that important barriers to adopting machine learning are not having enough data, or machine learning not being a priority, or finding it difficult to integrate machine learning into the business processes. And I think that all of these topics, they relate 100% to some of the themes that I've been talking about on my blog, The Data Scientist, but also on the podcast and the work I've been doing through the TESSERACT Academy as well, that the problem of insufficient data and machine learning not being a priority and not being able to integrate it in business processes is essentially a problem of education, of educating the right decision makers within an organization, and it is a problem of corporate culture. So the only way to integrate machine learning into the business is for all the stakeholders to understand what machine learning is, what it can and what it can't do. And this also relates to the data that is being collected. So the banks now, they didn't really follow a data strategy, let's say 20 or 30 years ago, which would allow them to make the best use of the data right now. But I mean, it's easy to understand why, right? Many of the technologies that we're currently using, they weren't around back then. However, we can still fix data collection in various ways as long as we have the right processes in place and the right operations in place. But this requires some cultural adaptations, which are not easy to do in very big organizations. Yeah, let's admit it. But that's the only solution. But in any case, the general, let's say, the summary of this report, the executive summary around this report is that AI, machine learning, they seem to be penetrating the financial institutions in the UK. And if you be following the news, it looks like the same is happening in other countries as well. For example, HSBC opened up data science innovation labs in London and Toronto, in order to extract insights from their data, which at the time of recording this podcast is over 10 petabytes. And it's the same with Bank of America, and also Capital One. So it looks like more and more banks, they start to be using machine learning. And finally, something interesting for those of you who are data scientists or who have some technical skills is that many of the techniques that the report discussed, because the report also asked what are the most common algorithms that were used, some of them can be quite simple, like tree-based models or even linear regression. And I found this fascinating because this proves that in most cases, delivering value is not about coming up with the most complicated model or the fanciest model, but it's about using the right technique for a problem. And quite often these techniques can be quite simple. This is a key takeaway for all those of you who are data scientists or aspiring to become data scientists. So that was it for today's podcast. You can find the report if you Google machine learning in UK financial services. This report is freely available by the Bank of England. Very interesting read. Highly recommend it to take a look at it. So I hope you enjoyed today's podcast. Thank you, and I hope to see you again soon. Thank you.
Thank you for listening. Make sure to visit thedatascientist.com for more content about data science, AI, and blockchain.